Time for another stock review. This time we're talking footwear. We're talking Skechers right now.
I've been looking at the chart. I've got a couple areas to be buying in. I've sort of identified a few trends that from the past that could be playing out again.
During this review, you're going to get the most honest live review ever seen before on the show. And I mean ever, because we've got a special guest on the show today in this review. It's the technicals as well as the fundamentals and everything I do. So stand by for the best review we've ever done, the most comprehensive review known to man. If you want a review, this is the best review in the history of the world ever. And if you're not sure about that, we know it's a great review when the little fellas turn up and wag their tail. So we know it's a great review. There it is. It's been pre-approved by the little fellas. Anyway, during this review, you're going to see a full back test against the S&P 500. We're also going to share with you...
Thank you, Martyn and Sensei, for taking the time.
Wow, look at that. How nice is that of Rallo1 coming in today? He requested this review. He's the one who asked for this. He's a member. He super chatted me. He said, can I have a review of reviews? And that's what you're going to get. Here is the numbers that we'll look at: the balance sheet, the profit and loss, the solvency score, the inside trading, who's buying, who's selling. We're also going to share with you the latest trends of the stock and the sentiment. We're going to look at the website. We're going to look at the latest news. Literally every single thing known to man, the S&P analysis, comparison on our business model. All of this is going to be done for you in this review. Plus, we're going to go over now to Sensei Crypto, who is with me as well live on the show. He is going to give his input. Sensei, if you can unmute yourself for a moment. And Sensei is live with us on the show today, and he's going to give us his perspective when it comes to Skechers from the technical point of view, the charts as well. Sensei, just give me a little taster of what's coming up with your part of this review, please, if you wouldn't mind.
Yes, thank you, Martyn. Yes, so Skechers, I've been looking at the chart. I've got a couple areas to be buying in. I've sort of identified a few trends that from the past that could be playing out again. We've got a few parallels to draw from the 2000s to the 2014, and now between 2015. And now we're breaking out of a big channel as we did back then. So I want to share with you my thoughts and where this stock can be going and where it could be a good buy-in zone.
Absolutely great. Look at that. So you're about to get the best ever. I'm very excited about this. This is going to be a lot of fun, right? So let's go into our review. So we're going to start nice and basic, and then we're going to get into all the fundamentals, everything that you need to know for you to decide whether you should own or this stock, buy, sell it, trade it, whatever. And then we're going to have the technicals with Sensei. So make sure you watch all of this video. You don't want to miss it. This is going to be the best review ever done of Skechers in the history of the world. Now, just full disclosure. No one pays me to, no one from the company pays me to do these reviews. My members give me a super chat to do it, but no one from the company is paying me or sponsoring me to say, hey, say our company's great. No one does that, and I wouldn't take it if they offered it. Let me prove to you, I'm only in the S&P. This is my actual money, my real money. I only own the S&P. I'm 100% in the S&P, so I'm not here at all to pump and dump the stock at all. I am not into that. I am just here to help and support our members. SKX, let me bring it back up on the screen and let's go. Right, so start nice and simple, straight. First of all, what is Skechers? It needs to be said, not everybody knows, and we need to make sure we don't miss any information and leave anything untold or discussed. Right, so first of all, now as you can see, this is Skechers at 58.56. It trends very much like the S&P 500 with extra volatility. So it provides you no dividend. This is a growth stock, so the S&P does give a dividend. No dividend here. But it does trend along the same track, the same channel and track as the S&P, and we'll share with you in a moment what I mean by that. But it does give volatility. It allows you to get in and out of this stock, as Sensei was just saying, and he will cover that in much more detail in a moment from the point of view of the technical analysis. Skechers U.S.A. engages in design, development and marketing of lifestyle footwear for men, women and children of all ages. It operates through the wholesale and direct consumer segment. By the way, we're going to talk to you in a minute how you can get the CEO on the show and how you can reply to the comments, and I will reply back to you in a few moments. So stick with me. The wholesale segment includes department stores, family shoe stores, specialty running, and sporting goods retailers. Do you wear Skechers? Put below in the comments what you wear, or do you prefer another brand? The direct to consumer segment is involved in selling directly to consumers through a combination of channels. The company was founded by Robert Greenberg and Michael Greenberg in 1992 and is headquartered in Manhattan Beach, California. Listed name is SKX. Founded in 1992, California, a nice American company with 17,900 employees. Now, Robert is the CEO of this company, and you might like him to be on the show. You might like him to be on the show, and you can have him on the show. It's very easy. How does it happen? We've had CEOs on the show already, and there's many more to come. Hoping one day to have Elon Musk and Richard Branson on the show. I've got plans to move towards that. It's happening. Oh, hang on a minute.
Can I bump up Robbie's snow review?
Of course you can. I'll come back to you at the end of this and discuss with you that review. This is being made during a live event, and only members can comment. So all the information is real and credible from verified users and supporters of our show. No scammers and bots and anyone promoting products here. Fantastic. Now, how do you get Robert on the show? What you can do is this. You might be an investor of Skechers, and you might love to have the CEO on the show to learn more about it. CEOs have said to me they love being on my show because it's a different approach than Bloomberg and Mad Money. They like to talk to me, get behind the man on the or the lady of the company, and we make a friendship and a relationship. And because of that, they come on and they enjoy it, right? We're not here to promote the company. However, we're here to tell the story. And if it's good, it's great. If it's bad, it's also, we're going to deliver that information too. So how do you get Robert on the show? I never email anyone. I don't sell my services to anyone. They come to me. It's how it works. But my investors do it. So what they do is they either create a Reddit channel, a Facebook group, a group on Instagram, or whatever it might be around the stock. I will provide you with the earnings. I will provide you with the news, these reviews, and so on. You then send it off via email to the investor relations or tag them in it. And below in the description on this video is an extra video, which is the invite to the CEO. It explains to them the process. And once you've had a conversation and they're starting to talk to you, then you can pass them to me and I'll put them on the show. But you do the whole thing. It's you involved, and you'll be the star of making this happen. I will never sell my products to them. I always believe in underselling and over-delivering and just getting on with it, as opposed to going to people saying, be on my show. We don't do that. They ask to be on the show because you, the investors, invite them to be on the show. All right, let's move on down. We've got Sensei waiting in the wings. If you're just tuned in, I'll give you a quick glimpse of Sensei in the chat. He's sitting there patiently waiting to give us his amazing chart perspective on this. There he is, look, all happy and proud. I'm loving it. All right, so we'll come back to Sensei in just a few moments. Let's carry on. And the charts are awaiting us. Looking forward to that. Now then, if you were buying this on margin, it's regarded as low risk. 25% is the lowest level. Still, every stock is a risk, but maintenance has been put, the risk factor has been put on the lowest level that you can apply to margin. Average volume at this stock is 1 million average. Today's volume so far, 92. So it doesn't have a great deal of volume at all. It's a slow moving stock. No dividend here at all. Price to earnings ratio, 1676. So that's the price between the ratio between the price you pay and what you earn on the stock, 1676. Now, you might go, well, that's cheaper than Tesla, of course, but you can't compare one company with another, one industry with another industry. What you wouldn't want to do is go perhaps to Reebok, Nike, whatever, and see what their price to earnings ratio, see who provides you with the best deal. That's what the price earnings ratio is. So we know it's making money because it's positive, not negative. but is it a good price to pay for the stock? Doesn't matter how bullish you are on a stock, would you pay $20 for a can of Coke? No, it's only worth $1, and you could only sell it to maybe for $1.50 to a really thirsty person sat on a beach. You couldn't sell it for $20 unless it was the last can of Coke on planet Earth. So you have to buy at value. If you're not buying at value, you're overpaying, and unless the stock is going to grow into that price, then that's a bad investment. You don't want to do that. That's why you need a chart in a minute to find the entry point. Once you're in, then you might want to hold for life and just and whatever. Anyway, market cap 8.9 billion, 52-week high 65, 52-week low 45. That gives you the volatility range. Okay, let's scrolling on down. This was done by Morningstar. I don't use Morningstar reviews, just a bit like JD Power is employed by Chevrolet to say we're the best car in the world. A lot of analysts are paid and sponsored and incentivized. I know you shouldn't say that, but it's just the reality. I'm not. They can't offer me $1 million to say anything great. I just say how it is. But it's worth noting what they say. Analysts, they've said 75% it's a strong buy, not really selling it, and 25% holding. So it's a very bullish sentiment here from Morningstar. If we look at the earnings, you can see it's positive earnings, and it's kind of going sideways. It's not really growing, but it's just doing the same thing. Now, there's nothing wrong with a company that's not growing. If it's just continually doing business and good business, there's nothing wrong with that. We'd like to see a company grow, of course, but if it just keeps making money and can consistently go on, then the stock price can go up because more and more people want to be in because the stock is earning the money. It just becomes more and more expensive. Anyway, who else is owning this stock? This gives you a sentiment with the stock and how it will trade. Disney, old money. Old money, good to know, because that means it's a stable stock. It's not got. We don't want to see Mullen in here. We don't want to see scam stocks in here, and you're not going to see that. I don't think. Uber, I think I've reviewed Uber, but a long time ago. Netflix, I wouldn't be an investor in Netflix. I'm a customer, but I wouldn't buy it. I don't. It's nothing proprietary as far as I'm concerned. Walmart, old money. Nike, no surprise, and Starbucks. Okay, good solid companies here. Good solid companies. So it's likely to trade appropriately. It's not going to be pump and dump, even though there's opportunity to trade this. And I will leave Sensei to cover all of that when we get to his part of the video. Please do click subscribe and ring the bell. Tap the like button. I will reply to all of my members. If you are a member of my channel, I will respond personally to all your videos. And a few times a year on Members Day, I will make a video in response to you. Coming up in a few minutes, we've got Sensei here. He's waiting to come on in with his charts. He's thinking, you bugger, I didn't know you were going to come to me then. He doesn't know when I'm going to come to him. Keeping him on his toes, right? Keeping him on his toes. Anyway, we've got Sensei waiting to give us the charts in just a couple of moments. First of all, let's go over now to the back test. This is where we compare to the S&P. You cannot beat the S&P. The best fund managers in the world compare themselves to the S&P. So why do you think you're smarter? Remember, 95% of day traders lose, and you don't have the algorithms and the technology that Wall Street does. So that makes you even less likely to win. Why do you think that you can beat the S&P when the fund managers of the world can't do it? So it's important to look at the S&P as a comparison. Even if you think it sounds boring, making money can be boring. Trading is very exciting, but I'm an investor. And I want to know that at the end of the day, at my end goal, I'm going to be at $1 million, which is where I will be currently. Not 12 years anymore, now down to 11 because looking at investing, and the S&P is a good benchmark. Now then, as you can see, as I said earlier, it does kind of follow the S&P. The overall growth is with the S&P. You can see it. It's not really dropping below. It's popping up, back down, popping up, back down, but following a general trend. Sensei will cover this in much more detail and use all the fancy terminology of the chart world, and he'll explain this in much greater detail than I will. I'm simplifying it for you at this stage at the moment. So you can see it's trending up, does very well. And you might like that. You might prefer that than the S&P. I have to say, when I noticed that this morning, I thought I like that as well, because you know it's a solid company. It's doing well, thank you very much, but it does allow profit, sell, buy, sell, buy, sell, and ultimately from here to here, you're going to make a lot more money because you can keep buying and selling it knowing that you're trending up. However, if you're doing that, you will pay tax if you are doing it on your brokerage. I would recommend, and this is not financial advice, of course, but I would recommend that you do that on your IRA or in the UK. That would be an ISA, so you can trade tax free. That way you can do it as many times as you want and not pay tax on it. So if you put $10,000 in 2011 in the S&P, you've got 5x now, which is great. Every 7 years, typically the S&P will double. That's what it typically does. Okay, we've gone up 5 times, 53. Great, fantastic, great, nothing wrong with that. And that is with reinvesting the dividends. There are no dividends on Skechers, but there are with S&P, and I've applied the dividends to this model here. The Skechers 10,000 would have earned you a 9x, 91,000. You'd be very, very happy with that. But is it all over? Well, since 2011, we're seeing a consistent rise with the S&P. Nothing here to suggest it's over by any means, but Sensei, I'm sure, will give us much more information on that in a moment. If you've just tuned in and you're watching this part of the video, here is Sensei waiting in the wings to come and join us with his charts. Look at that, look. He's drawing on all his patterns and all the rest of it, and it's going to get very exciting when we get to that part of the video. I'm sure you're going to love it. Right, okay, now then, let's look at the website. This is the website. We're not going to go much into this. We all know what Skechers' website looks like. Somebody mentioned earlier, laceless shoes. That's the young generation. If you're old like me, you probably call it slip-ons. And if I say slip-ons in a Skechers video, I can see the share price going right down because people go, you're making it look like an old man stock. Well, it is an old man stock, even if it's very trendy for the young people. I would call that a pair of slip-ons, even though many of you would disagree with me. Anyway, scrolling on down to all the slip-ons, laceless shoes, you can see what slip-ins. Slip-ins. See? That's the modern version of slip-ons. It's now slip-in, right? Okay, sounds better. I'll agree. Slip-in sounds better. Done it? Anyway, latest news, breaking news. We're looking for new catalyst to drive the stock upwards. Latest news just out literally a couple of days ago. I think actually it was yesterday, actually. This is very new. Alberto Pujols signs with Team Skechers, Los Angeles Global Footwear. And I apologize for looking on my mirror screen. The text is so small, I have to look over here to be able to read it. I apologize for looking away from you as I am reading this out. But anyway, global footwear brand Skechers introduces some legendary batting power to its lineup by signing former Cardinals and Angels star Albert Pujols as his latest brand ambassador. Two-time world champion and future Hall of Famer known as La Maquina will star in Spanish language campaigns designed to educate fans about easy to wear and comfortable Skechers hands-free slip-ins. There you go, slip-ins. What do you think about that? I'm just trying to get, where's my button gone? Where's my button? I want to press this little button. What do you think about that, fellas? Slip-ins, slip-ons? What do you reckon? The little fellas love it. The little fellas love it. There you go. I agree. Slip-ins probably sounds better. Anyway, after 22 years on the field, I'm ready to take it easy. So these amazing shoes from Skechers that I can put on without any effort are exactly what I need, says Albert Pujols. I'm excited to be part of the Skechers team. All it took was stepping into a pair of Skechers hands-free slip-ins, and it was a home run for me. Great attention on the stock. We love publicity. We saw what happened yesterday with Beyonce and Levi's. Same thing. The stock went berserk because some famous person got in on it, and we saw what happened. Now this can happen for Skechers. This is just out. We saw what happens with Beyonce on Levi's. Can this happen and repeat itself with Skechers? Well, only time will tell. Have you tapped the like button? Have you subscribed so far? Okay, now let's go and see if we can make some money. We're going to bring Sensei into the video in just a couple of seconds. But first of all, can we make money on this stock? Here is the printing money. Can we turn it on? Does it all stack up? Well, do the charts make sense? Well, in a moment, Sensei will tell us if the charts make sense as we peruse over the charts. Do you like that? Do you like that peruse? Or are we going to get hot under the collar and shout and scream? This is going to be me and Sensei in a minute. I'm going to be shouting and screaming at him as we all get all excited like it used to be in the Wolf of Wall Street. It's not like that anymore. It's all done by computers now. Anyway, before we bring Sensei in, just before we do, let's look at the fundamentals. First of all, we're going to look at the intrinsic value. Undervalued by 17%. Undervalued. It's a good time to buy. Worst case scenario, overvalued by 13%, but it's a growth stock. You can overpay by 25% on a growth stock. That's okay. And with the news like we just mentioned, maybe there's opportunity there. On the base case, there is 18%. On a best case, 54%. Very nice indeed. Scrolling on down. The Q4 earnings call. I'm just going to give you a bit of a headline. We've got the next earnings shortly. And hopefully we'll cover it on our show. If anyone, one of my members super chats me to cover the earnings, I'll go late in the evening and I'll cover the earnings for you, and we can attach that to this video with all our invite the CEO information. Skechers ended 23 on a high note and setting a new annual sales record of 8 billion, up from the previous year of 556 million. Very nice indeed, with a fourth quarter contributions of 1.96 billion. Notably, the company achieved a new annual gross margin of 51.9% and earnings per share increased to 349. Good stuff. The direct-to-consumer segment grew by a remarkable 20%, accounting for over half of total sales for the first time, while the international sales rose by 7%, forming 64% of fourth quarter sales. However, challenges in wholesale influenced by inventory management and seasonal demands led to an overall decrease of 8%, with domestic wholesale dropping by 10%. Despite this, the company's strategic focus on consumer demand, innovative products, and effective brand marketing signals robust omni-channel growth opportunities, or as you say in America, opportunities. All right, that's more New York, isn't it? Opportunity. There you go. Anyway, look at this. Very nice indeed. Very, very good balance sheet. I like the balance sheet. It's growing up 1% on the most recent range and a nice curve. Not an S curve, but a nice steady curve. Operating income. Got to say so far, this is a strong buy from me. Maybe not at this price. Sensei will give us the price of entry, but it's certainly a good company. If you like the S&P long-term growth, but you want the opportunity to buy and sell on your IRA or ISA, this could be the one for you. This could be the stock for you. I like it. I'm liking it so far. I'm falling in love with it. Skechers, send me a pair of shoes. Send me a pair of shoes. Just to try and, bribe me a little bit. You might as well, because money isn't going to work, but a pair of shoes might. Anyway, 784, I'm only joking. Just send me shoes because I like the shoes, right? 784 million, up 6%. And that is an S-curve forming at the end of that tail there. Net income up 2%. Let's go down to the operating cash flow, up 3%. What about the balance sheet? All very important stuff. The balance sheet at 7.5 billion in assets, of which 1.3 billion is in cash. Always nice to have some cash for investing and all that kind of stuff and future growth. We have a good balance sheet, not upside down. 3.5 billion, short-term debt 11, long-term debt 249 million. Do you know what? I've not seen for a while, a company of this size with such little debt, Apple and Amazon, they like to keep debt on the books. This company don't like to have debt. It's a very well-managed company. I like it. And there's nothing wrong with debt. If you can make more money from the cash, keep the debt, it's okay. I get it. But this company, a bit like me, they don't like debt. So Dave Ramsey won't like this. Dave Ramsey will be going, Dave Ramsey will like this. He will like this, all right? This is a Dave Ramsey stock. Long-term debt, how much does that apply to? Long-term debt is just 6%. This is a very, very nice balance sheet. Now, I'm seeing this live with you. I'm going to come to Sensei now, just catch him out. See if I can catch Sensei out. Let's see if he's still there. Yep, just about to come on to you, Sensei. Are you bored yet? Are you bored yet? I'll be back to you in a minute. I know. It's a long review, but I'll be with you. Oh, hello. What's this?
Please cover SKX earnings call.
Oh my gosh, you want me to cover the earnings for it as well? Okay, I'll cover the earnings. Let me confirm I'm able to via the date, but I will check that in a minute. Let's have a look now. We like the balance sheet. Now, I'm seeing this for the first time live, real time. I don't get chance to do the videos. I make them all live, edit them live. The whole thing is done live. I don't know, but I'm telling you now, I predict as I scroll down, I haven't seen it yet. As I scroll down, I'm expecting a good balance, a good solvency score. What do we see here? Margins. Now, are the margins good? Well, they look good, 52%. But if you're going to buy this, how does it compare? Reebok, Nike, all the others. You've got to go and compare. And I'm going to give you the link in a minute where you can access my software. You can literally break into my computer and use my software. Yeah, I'll show you in a minute how you can do it. Good margins, all green and growing. More importantly, growing. They're becoming more efficient. Their moat is good. Free cash flow. This is looking very nice. This is one of the best balance sheets I've seen for a while. Oh, the highest solvency score I have ever seen. That has to get a round of applause. That's the highest solvency score I have ever seen. Fantastic. So I'm going to give that now my special green. I'm going to give this now where is it? Ka-ching. There it is. I'm going to give it a ka-ching. That has to be the best solvency score I've ever seen. 87 is very, 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 very good indeed. So it's time to look into the crystal ball. I predict this is going to be a buy from me. Let's see where Sensei draws it. I like this. This is looking good. I like a good balance sheet. Profitability, 58. We like that. Again, hold your horses. Is it going to be the best profitability score? We've got a positive, we've got an amber 3-year. Is it perfect? No, nothing's perfect. We'll compare it in a minute. Right, what have we got? 5% worst case scenario. I can afford a 5% downside. I'm okay with that worst case scenario. 22% upside, nearly double the S&P. Very, very good as an average. Or what about the 50% on the upside? This is looking like a very, very firm buy from me. What do you think? What's Sensei going to say? This will be interesting. What about the competitive landscape? Now then, this is where you can go and compare to the competition. So how do you do that? Well, if you click above my head, I'll give you the links. It's also below in the description. You can use my software. It's the most advanced algorithmic software out there. You can use it. My members get it for free as a basic plan, or if you become if you pay for the premium plan, my membership will give you the link to get a lifetime discount, which basically makes my membership for free. Another reason to be a member. There are too many to even list. Anyway, there you go. You do want to compare to the competition and look at what the other business is doing. We've got Crocs. I like Crocs. I have to say I like Crocs. Steve Madden, remember that? Wolf of Wall Street. Remember Wolf of Wall Street? Steve Madden? We could do loads of jokes about it, but we're not gonna. We got to carry on. Sensei's going, bloody hell, when do I get my part in this show? Anyway, insiders have been selling. Now, normally I don't like to see insiders selling, but at all-time highs when the company is so strong, what we've got here is some selling. Let's have a look. During the last 12 months, Skechers insiders bought 244,000, not a lot, but sold 56 million worth of shares. Now, we have to remember, when we see insider movement, whether it's buying or selling, it doesn't always mean a good or bad thing, because certain amount of selling is part of the basic process. We see Google selling all the time. We see Coca-Cola being sold all the time because there are tax reasons, and a lot of these insiders, CEOs, CFOs, they will have a set time when their stocks will sell for tax purposes, automated. They won't even know they're doing it. They won't even be aware of it. But there is some selling here. It makes sense that there's not any buying right going on now because we are at an all-time high. Why would you not trim off? And this stock, as we know, presents opportunity to sell and take some profit. Anyway, short squeeze, none at all. 2%, nowhere near. You need at least 20% for a short squeeze. Not enough volume. No negative sentiment here. No short squeeze. You've just got some people trying to wait for the next dip because it will drop again. It does it over and over again and try to trade it on the way down. I can't be bothered with shorting. I've never done it. I never will. I don't see any point to it. Anyway, 2 days ago, we're just about to bring Sensei into the show. 2 days ago, some latest thoughts. What have we got around Skechers just 2 days ago? Let's have a look.
Skechers, Deckers Outdoor, and On Holding, with each stock receiving an overweight rating. Here with us now is the author of that note, Adrienne Yee. She's managing director and consumer discretionary analyst at Barclays. Adrienne, it's wonderful to have you here with us. I guess you've got 4 stocks here. Let's start with Crocs. Why are you so compelled when you look at a name like Crocs? I think so many of us look at them as a fashion fad that surprisingly has not faded.
Yes. What I'd say about the 4 names that we initiated on, I would say that the footwear space is unique in that it allows for a lot of white space. So if you have a compelling brand and you have loyalty across, for different income brackets and different demographics, you can actually continue to succeed. I think what we like about Crocs is they command, literally the highest product margins, as one can imagine, right? 70% versus the sector, sort of 50, 60%. And then in terms of operating margins, once they get that leverage on the model, they are printing, north of 25% operating margins, which is far and away like 1,000 basis points, 10 points above others.
Yeah, and when it comes to some of these names, obviously they operate in slightly different subsectors.
And I'm showing this video because we're going to compare the two, and this is important to compare the leaders in the footwear space. You don't just want to be thinking, well, Skechers sounds great. How does it compare to Crocs and everything else? It's important. So we're going to hear the comparison in a moment. Here we go.
But obviously Nike has been just this mega brand for so many years. We know they have their individual stumbles. Are any of these names also partial beneficiaries of Nike sort of working out its own problems?
So you hit the nail on the head. If we look at the horizon from 2016 to 2022, globally, Nike and as well as Adidas have given up, 4% from Nike and about 3.5% from Adidas. And so that opens up a ton of oxygen in the room for these nascent brands, like a Hoka and like an On Running, as well as a bunch of other running specialty, sneaker brands. And so what we've heard from Nike, self-admittedly, is that they really didn't do a good job in closing the door over the past 2 to 3 years and blocking out some of these innovative competitors. And I think we also heard on the last call from Nike that it's going to take some time for them to retrench, right? So they're doing franchise management and they're going to hold back on selling, certain of their products into the market. Again, it takes about 15 months to 2 years to build this innovation pipeline back. And it's going to leave some room for Hoka and for On.
I think of these brands, and I mean this in a non-pejorative way, whether it's Hoka or whether it's Crocs or whether it's Uggs or even Skechers, maybe even On, as niche-y. They're a little fun. They're niche-y. And maybe their future is in not trying to take on Nike, because who can? Am I barking up the right tree there that if they play their niche really well,
Skechers,
if their niche can mean rich?
Yes. So Tyler, I think you are spot on with the notion that each of these has a technology, a loyal following, a brand differentiator that at their size, right, can last them for years on the come. We like to think about kind of these brands as the S curve of adoption. And we always like these brands are their best and strongest when they go from late early adoption to early mass adoption. That runway that has low brand awareness and high brand desirability can propel these brands for years. And we used to see this kind of back in the early 2000s, where you would see 3, 5, 7-year runs on these great brands. So I think you are absolutely correct. These guys need to stick to their technology and kind of play their own game in an area where they're still the smaller competitors, and they could double in size pretty easily with, not a lot of, harm, in terms of kind of taking a ton of share from the incumbents.
There you go. That's what it's all about. I've felt the same way as my show. Be nichey, be different, be unique, and the old school can be overtaken, and there can be massive amounts of growth here, which is why Skechers is doing well. But you do want to compare to the competition. Now, just before we bring Sensei in, we're about to do that now in the next 30 seconds. The last thing I want to share with you is, and I'll give my final thoughts after Sensei, and we'll debate as well together, is if we look at the sentiment of the stock over the last 90 days. Let's see how things have improved. Over the last 90 days, we had 52% positive. Over the last 30 days, it's dropped to 42. The 7 days is now 66. And today, we only have one item of news. So sentiment is moving in the right direction too. So without further ado, it is now time to bring Sensei on the show. And we're going to look at it, if you can unmute yourself, Sensei. And we're going to look at it now from the point of view of a chart. You looked at the fundamentals, you looked at the news, you looked at the back test with the S&P. You've heard from the fund managers how it might compare to Nike and so on and so forth. But now we want to look at it and to see what Sensei will say as far as the charts are concerned. Tap the like button so far. Are you in? And not for me, but not for me. Tap the like button for the little kittens. The little kittens are thinking, I would love, oh, hello. Have you got any Skechers? Let's go and talk to Sensei. Sensei will tell me all about it. I want to hear from Sensei. Yeah. No, bring on the little fellas. Bring on the little fellas. Okay, enough of that nonsense. We can't be doing that. All right, here he is. Sensei Crypto, live on the show today. Sensei, thank you for joining me. How are you today?
Yeah, thank you, Martyn. Let's have a look at the technicals and the entry points. Just looking at it from the past, we can see where it IPO'd in 1999, and it formed this wedge pattern all the way until 2014 when it broke out. And ever since, we have formed another wedge pattern, which we are breaking out of now. Before I show you the entry points and if I would be buying it and if I would be trading the stock, I wanted to compare it to 3 other stocks. One would be Crocs, one would be Nike, and the other one would be the S&P 500. We've already seen the comparison with the S&P 500, so let's start with Crocs, which is basically the same sort of market cap as Skechers. It did IPO fairly a few years after, in 2006. So the yellow line here is the Crocs stock. So it did have an initial pop, but we don't want to look at the IPO of Crocs, because that's the IPOs, as you know, are always overinflated and they don't serve an accurate picture of the stock. So going from 2009, they've had slight discrepancies. For example, Crocs didn't have as great growth in 2010 as Skechers has had. And then Crocs went sideways for a long period. And within that time where Crocs was going sideways and downwards between 2011 and 2017, it went from a price of I think about $31 all the way down to $3. Skechers went up from about $4 all the way up to $53, and at the same point up to around $42. So Crocs wasn't outperforming Skechers at all until we got to 2020, and when Crocs had that low, it had an explosive move all the way up in basically a straight line, and that's the only time where it's basically outperformed Skechers. And ever since, Skechers has been outperforming Crocs this whole time. So it does look like Skechers is a better stock than Crocs. When comparing it, it always seems to outperform Crocs. But comparing it to Nike, or Nike, as we say in the UK, it's very similar. The ups and the downs are very similar. It does look like Skechers, for example, here in 2015 outperformed Nike. Right now, it's very, very interesting looking at the stock right now from 2022 to today. Nike has been going down, Skechers has been going up. So you might say that's very good for Skechers. However, the way I look at it is, does that mean Skechers is getting a bit overvalued and Nike's looking like the better buy? That's the way I sometimes look at things. If things are at all-time highs and Nike, which is the dominant one, the one that's about 20 times in market cap, 20 times bigger company, and that's going down in price, and Skechers is going up, does that mean it's giving us an area to be buying Nike instead of Skechers? We'll look at that, and we'll look at the buy points for Skechers. And now comparing it to the S&P 500, this is where it's very interesting. It basically is following the S&P 500 very, very closely. As you can see, the S&P 500 is making all-time highs at the moment, and so is Skechers. In the recent weeks and months, the S&P 500 is going up, the Skechers is going up in value. So it is, and this downtrend in 2022, we know that sort of bear market. S&P was going down, Skechers were going down. They are very, very correlated, the S&P 500 and Skechers, apart from the 2015 run. It must have had something to do with Skechers earnings or some projected values where Skechers really did outperform the S&P. And even in the past, it is very, very correlated, the S&P 500 and Skechers, which just shows that they're similar stocks. Obviously, the S&P 500 is the 500 biggest companies, but Skechers is following the market. It's growing steadily, just like the S&P 500. So if you don't if you don't see the value in Skechers, the S&P could be an alternative. And the only thing is the S&P 500 has dividends, and I'll get onto that because Skechers is, as you've seen, the growth is very nice. The fundamentals are looking good. If an announcement of dividends come, then the price of this stock will go up further. So you do have that going for Skechers. So what I would like to show you now is where I would buy this stock. In case, for example, you really like the fundamentals, you've done your own research and you want to buy in case a dividend comes out, the news of a dividend comes out, or you think the stock's going to continue to perform well and you don't want to hold the S&P, or you already own the S&P, you want to hold a shoe company or something like that, I'll give you the buy price. But just before I do that, I'm going to go back and show you exactly how I would be treating this stock, because I'm not someone to be buying stocks and holding them long term for growth. I'd rather buy the S&P. With a stock like this, I'd rather be trading it. And with this stock, it's been very, very easy to trade when you look back on it. I have never traded this stock, full disclosure. This is one of the first times looking at the stock. But it's one of the simplest ways of trading, and you can easily apply it to this stock. So basically, the way I would be, let me get rid of all of these so you can see it a bit better. You can go in the past and you can see that we had, let me rearrange it. Yeah, there we go. You can see in the past that we had this wedge pattern. And every time you could just draw a line from the highs and you draw a trend. You just draw a very, very simple trend line. You draw a trend line from the top and you join it and you see what the trend is. The trend was going downwards. Then as soon as you break that trend at this bottom here, that's where your buy price would be. And once again, you see a trend forming and you want to buy in, you'll be buying when this trend breaks over here. And you've got the gains over here, the gains over here, and you can apply it to this new wedge pattern. For example, as in 2015, that high price we saw, you just draw a trend line all the way down, connect a few high points. As soon as the trend breaks, you buy in. And as soon as you buy in, you've got at least a 92% move to the upwards. You've got another trend line there. That breaks, you've moved up 87%. COVID, obviously a little bit different because it was a very steep trend line. So we can ignore that, or you can still draw a trend line however you like. It doesn't have to be very accurate when you're trading on a longer term time frame. And then you're up 136%. Then again, a very accurate trend line here. You just draw it. A trend line connecting the lower highs, just a very simple trend line. As soon as it breaks, there you go, you've made another 74%. What's interesting right now is we've got the sort of opposite forming. We've got a trend line with the higher lows. And if this trend line with the higher lows breaks, what you're looking for is a $29 Skechers price, which would be which would mean, the reason I say $29 is because I'm connecting the longer term all the way from 2014, the higher lows, all the way from 2014 October, connecting it to October the 10th of 2016, connecting it to 2018, connecting it to the COVID lows, and that would be my target if the trend breaks. Yes, it's a very low target, but where I would want to be buying this stock is at value. For example, Nike's going down. I'd like to be buying it if it was in a buy zone. I don't want to be buying this stock at all-time highs. Maybe I'd be dollar cost averaging at all-time highs, or the next point I'd be dollar cost averaging this stock would be at the trend line of the previous all-time highs in 2015. So my first buy-in price, here we go, my first buy-in price would be $54.85, and that's if I wanted to start DCAing into this stock. That would be my first buy-in price, would be around the $55. My second buy-in price would basically be either you're looking at $45, which is a low of 2023. That would be my second buy-in price. And then looking at my final buy-in price, which would be all these higher lows, the higher lows, the accumulation, the more buyers in this market. This will be my final and probably the area where I'll deploy the most cash if we ever do get to it, which is around the $29 to $30 area. So I would always, that is a 50% drop, but we've seen earnings calls come out. We've seen these drops happen in other stocks. We've seen this drops happen we saw a 63% drop in the stock in 2015. We saw a 48% drop in 2018. We saw a 60% drop in 2020. We saw a 44% drop in 2022. So these drops do happen, and you need to have money aside to be buying it at the most high value, lowest risk area, which in my opinion would be around the $28 to $30 area. But if you love this stock, if you think there's good news around the corner, if you think there's going to be a dividend, you think it's better than the competition, then I'm not going to stop you from dollar cost averaging. I wouldn't buy it right now. I would wait for a little pullback to previous all-time highs, test it as support, and you're looking at maybe $54 to start dollar cost averaging, then maybe $45, and then ultimately that $30 level. One more thing I'd like to show you, all the viewers, is the MACD, which shows sort of the trend. It includes the volume and the trend and the momentum of the stock, and also the RSI. The RSI is not in the best position to be buying. It is in the bullish control zone at 51, but it's not overbought, which is good. It's not oversold, which isn't presenting any value. The best times to buy this stock, as you can see from this trend line we've been showing you about the higher lows, would have been when the RSI was oversold in 2016. It oversold, and that's when the trend broke, and that's when you got your 50% move up. The next time it was sort of very close to being oversold was that next low. Then COVID, it was oversold, and that's when you had the 100% move up, and we're not oversold. So that's another reason I wouldn't be getting into it. And finally, the other indicator would be the MACD, which is currently the trend. As you can see, it's these red lines here. When this trend is in red, it just shows that the momentum is for the sellers and the momentum's coming into the downside. We have had a few weeks of this red momentum, and it's only growing. As you can see, let me make it bigger for everyone. You can see the momentum is growing to the downside, which is not good. The time to be buying is when either you just ticked green or the momentum is changing. And I'll show you the example of that. In 2023, when we had that the last buying opportunity at $45, you could see as soon as the red started, it was when we were at the highs, and when it peaked at the lowest areas where we made its lows, and when we started to tick green is when you had the opportunity. And you can see this happen many times. You can go back to all the buying opportunities where when it started going red, you started going further down. As soon as it turned red here on the weekly, we were at about $50, and when we peaked on the red, we were about we saved about $23, about 50% move. So all I'm trying to show you, just to keep it simple, is when the MACD indicator is continuing to go downwards, when the selling pressure is continuing to be there, it's probably not the best time to buy. So I've given you my 3 buy zones. The reason why I'm not buying right now: the area I'll be buying 55 if you really like the company and you want to start dollar costing averaging in, the second top up zone at $45, and the ultimate low risk area to be buying this stock and having your limit orders would be $29. And everything I say is not financial advice, so please do what you want, your own research, and do choose what to do yourself. But that's my full analysis, Martyn, so I'll give it back to you.
Absolutely fantastic. A lot of information in there, Sensei. Thank you for that. Not just for this particular stock, but how to read the charts, how to get the most out of it. That was fantastic. So I think everyone will really appreciate that. Sensei, thanks for giving us your time today. I'm going to let you go. I know you're very busy, but thank you for doing that for one of our members today. Sensei, once again, thanks for calling in. Appreciate it.
Thank you, Martyn.
Absolutely great. That was Sensei Crypto this morning, giving you his thoughts and opinions there on Skechers. So there is a full review. We've never done that before. That must be an hour-long video of the news, the trends, the charts, the fundamentals, the history, comparisons to the S&P, the balance sheet, the solvency score, the profit, the loss, you name it. You now have an informed decision. So I'm going to give you my final thoughts now and tell you what I think of this stock. Would I buy this stock? Well, you can see over there to my left here is the real crystal ball, just over there. If you can just see at the end of my finger there is the real crystal ball. What do I think of this stock? Well, I like it. I like it. I like the fact that it follows the S&P. I think Sensei was spot on there with the opportunities that you're looking for entry points, exit points. So I'm going to give it a buy. Just got to wait for the right opportunity now, like Sensei did. And if you want to go back and rewind this video and look at all those opportunities, you certainly can. Fantastic. So there you go. What a review that was. I think the best review we've ever done. You seem to like it too. Zax8 just said the best coverage ever. Well, it doesn't get much better than that. There you go. Thank you so much indeed. If you're a member of our channel, you can have a review like this. Give us a super chat and we'll do it. Can't promise you that we can do a review with Sensei on a live show like this, but we'll do our best. And Sensei said, well, you never know. If it's worth the time, you never know. I might pop on in. Anyway, click above my head for all the links down below in the description. Invite the CEO. Remember, you can build up your own Reddit channel, Facebook group. We'll provide you all the content, and then you can get the CEO on the show. It can happen. You'll do it. No problem at all. I would imagine this video will rank very well on YouTube within about a week or so. Here is the extra channel. This is behind the scenes. If you want to join us live 12 hours a day to catch all the updates and all the stuff that's going on behind the scenes. You don't want to miss any of that. So there you go. Above my head, down here, and over here, all the reviews. We've got a full playlist here of all the reviews that we've done. Way over 100. It won't be long before it's 200 reviews. Incredible stuff. All on Alpha Spread. Now, if you do use my software, the link is above my head, down below. You've got to use it. It's fantastic. All members can get a free version of it. It does limit you with how much you can do and how many shares and stocks you can cover. And the complexity, but if you become a premium server of Alpha Spread, you will get a lifetime discount and basically make my membership for free. It's that good. All right, I've got the best deal, better than Bloomberg, CNBC. Nobody else gets the deal that I've negotiated on your behalf. So take advantage of it. It's one of the perks of being a member. Rallo1, I'm going to put this in. This was our member who asked us to cover it. That was absolutely the best review ever. Thank you. Well worth the super chats. Fantastic. All right, until next time, as always, shall we hear from the little fellas? Shall we? Did you like the review, boys? Yes, we absolutely loved it. Yes, we did. We're buying some Skechers for our slip-ins. Look at that. Not for me, not for the little fellas, but for the kittens and the little fellas. Please do join us next time. As always, Take care of yourselves and each other.